Something massive just happened in the silver market, something we haven't seen in more than 14 years. Silver prices have just wrapped up their seventh straight week of gains, climbing nearly 3% this week alone, and closing the week at $47.59 per ounce on COMEX, according to TradingView's data talk. That's not just another market move, it's a historic signal that could mark the beginning of silver's next big breakout. After spending more than a decade in the shadows, silver is finally showing the kind of strength that could take it back to its legendary $50 level, the same mark that defined its 2011 peak. According to TradingView's DJN data talk, silver prices climbed 2.94% higher on the week, finishing at $47.597, marking one of the strongest weekly closes since 2011. This 7-week streak of consecutive gains hasn't happened in over a decade. The report highlights that investor momentum, industrial demand, and growing speculation of Federal Reserve rate cuts have become the driving forces behind this powerful run. Silver has quietly become one of the best-performing commodities of the past month. The market isn't just being pushed by traders, it's being fueled by a combination of economic uncertainty, central bank policy shifts, and real-world industrial demand that shows no sign of slowing down. The technical setup is equally stunning. TradingView data shows silver holding firm near the $47.50 resistance zone. This is critical because a sustained breakout above $48 would open the path directly toward the $49.80 to $50 target range, levels that haven't been seen since the 2011 high. But what's different this time is that the move isn't being driven by pure speculation. In 2011, silver's surge was fast and unsustainable. Today, it's being built on real structural support, supply constraints, industrial expansion, and long-term investor positioning. 7 straight weeks of gains reflect uninterrupted buying pressure. Every small dip has been quickly bought back, signaling confidence not just from retail traders, but from institutional investors who are re-entering the silver market for the first time in years. So what's behind this surge? According to TradingView's TE News report, the momentum is being powered by 2 main forces: growing confidence that the Federal Reserve will begin cutting rates soon, and a surge in safe haven demand due to renewed fears of political instability and slowing U.S. growth. Rate cuts typically weaken the U.S. dollar and lower bond yields, making metals like silver more attractive as alternative stores of value. But what makes silver unique is its dual identity: part precious metal, part industrial powerhouse. Unlike gold, which primarily acts as a hedge against inflation, silver has an additional driver: real-world industrial use. It's essential in solar panels, electric vehicles, and advanced electronics, sectors that are all growing at record pace. Analysts on TradingView highlight that this dual demand has made silver one of the most balanced commodities on the planet, able to thrive in both economic growth and uncertainty. From a 14-year perspective, silver's recent move is monumental. Prices are now back to levels last seen in 2011, but this time the foundation looks far more sustainable. Mining output remains stagnant while consumption in clean energy technology is surging. Supply is tightening, not expanding. Global industrial demand for silver has hit new highs, driven by solar manufacturing, battery technology, and semiconductors. Meanwhile, central banks and private investors continue to accumulate silver as part of their diversification strategy against fiat risk. Analysts describe this as a structural shift, not a temporary rally. Mining companies are reporting limited new exploration and rising extraction costs, which means the market could soon face a supply squeeze. The combination of steady industrial growth and shrinking supply is precisely the formula that could drive silver beyond $50, not in a speculative spike, but through a fundamental revaluation. TradingView sentiment trackers also show a remarkable psychological shift in the market. Retail traders, ETF inflows, and institutional hedgers are now aligned in the same direction, something rarely seen. That alignment suggests deep confidence in silver's long-term strength. Data Talk reports that weekly gains of around 3%, like the one we just saw, have historically been precursors to multi-week continuation rallies, especially when confirmed by rising momentum indicators. The current setup shows no strong signs of overbought exhaustion yet, which means silver's bullish phase could still have a lot of room left to run. For long-term investors who've held silver for years, or even decades, this moment is deeply emotional. After a long stretch of sideways performance, this breakout feels like long-awaited vindication. The forgotten metal is finally stepping back into the spotlight. Now comes the big question. Can silver actually hit $50? According to analysts referenced in TradingView's TE News report, the answer is yes, it's possible. But it depends heavily on upcoming macro triggers. If the Federal Reserve officially confirms a rate cut by November or December, it could unleash the next wave of buying that propels silver straight into the $50 zone. Meanwhile, any signs of economic slowdown, government gridlock, or dollar weakness could amplify the move even further. That said, analysts also warn that silver is known for its volatility. Pullbacks are natural, and short-term traders are likely to take profits along the way. But with solid support now forming around $46, the medium-term structure remains decisively bullish. Globally, silver's rally is already creating ripple effects. Industrial buyers, especially in Asia, are rushing to secure supply as prices climb. Solar manufacturers are facing higher costs, while refiners are reporting extended delivery times. This has created a feedback loop. As buyers hurry to secure silver before prices rise further, they unintentionally push prices up even faster. Some experts on TradingView describe this moment as the early stage of a mini supply squeeze, not unlike what happened in 2010 before silver exploded to $48. That period was followed by a rapid, parabolic rise, and while today's fundamentals are different, the early patterns look strikingly similar. After more than a decade of underperformance, silver is finally stepping out of gold's shadow. This isn't just a market move, it's a reawakening of one of the most undervalued assets in the modern economy. From roughly $22 earlier this year to almost $48 today, silver has more than doubled in less than 10 months. That kind of performance can't be ignored. It's not luck, it's a reflection of changing global priorities, shifting economic cycles, and growing awareness of tangible assets in an increasingly uncertain world. As TradingView's Data Talk summed it up perfectly, silver ends the week nearly 3% higher, holding strong near its 14-year highs as momentum buyers continue to lead the charge. That sentence captures the moment in history we're living through. The metal long overlooked is now the market's brightest story. So, what happens next? If silver can break and hold above $48, the gates to $50 and possibly beyond could open quickly. But always remember, silver's power cuts both ways. Volatility is its nature. This analysis is for information and educational purposes only, based on verified TradingView reports, Data Talk, TE News, and market summaries, October 2025. It's not financial advice. The facts are simple. Silver's fundamentals have never looked stronger. Its price momentum is the best in over a decade, and its story, one of resilience, patience, and rebirth, is only just beginning. Because this time, silver isn't following the crowd. It's leading it. Disclaimer: this video is for informational and educational purposes only. It is not financial advice. All market data and analysis are based on publicly available TradingView sources. Always do your own research or consult a licensed financial advisor before making any investment decisions.